So let's welcome on board our chartists and figure out what is it that they're making of how to brace ourselves for this Monday. We've got Rudra on the show and Kunal, of course, is here in the studios. Kunal, today, of course, we won't be spared. We will fall down with the rest of the globe. What do you do?
Yeah, I mean, you just wait and watch. You see the expectation in terms of news flow to abate. But then we know that I think the markets are into that heat of volatility because of the kind of news flow surrounding us. So, it's a very natural course of price action across the globe, across various asset classes, what we're seeing. So right now, I think none of the asset classes are spared, whether it's the equities, billions, even Bitcoin to a larger extent. I think all of these asset classes going through a correction. The key aspect over here, and when we just looked at the historical data, we pointed out that if CBOE VIX starts to rise above the 35 mark, that calls in for a sharp bit of correction. We've seen that happening in 2020, 2008, and I think even prior levels to that. That whenever the CBOE VIX crosses above those levels, it causes a sharper correction across the US markets, which eventually, of course, trickles to the rest of the global asset classes. What we need to see on the way down is that if and when, so I think on Friday we closed at 40 or 41 plus for the CBOE VIX. If we come back below the 35 mark, say eventually over the next few days, that could be a point where the markets would make a formidable bottom for themselves. So it's very difficult to try and call it that what level the index would probably stabilize. But then I think we just need to wait out for those global data points to start abating.
Absolutely. Rudra, what do you do? Short the market further, I guess?
See, it is not wise to short a market after such a big gap down of 900 points, what we are seeing right now on Nifty. And then again, also Bank Nifty was relatively stronger the last week, and that should continue for some more time because of valuation comfort what you have in Bank Nifty. So for me, this is a market where you can't short after such a huge gap down. Only thing is wait for markets to settle. So might be the previous recent lows of 21,964, which was on Nifty spot, made on 4th of March will be a strong support right now. So 21,800 to 22,000 will be the level on Nifty where market should find some support, and similar levels on Bank Nifty will be much below, which is at around 47,500 to 48,000. So avoid IT as a sector till these tariff retaliation, tariff news and all surrounds us will cool off a bit, and stay with sectors where you have more comfort. Be with large cap, avoid mid and small cap in general, stay with private banks, be very stock specific. Crude oil coming down below $65 per barrel for Brent and NYMEX below $60 per barrel will be definitely beneficial to sector like aviation. Look at stock like Indigo there, which is very, very strong. So you have to be very sector specific and stock specific. Even private banks like HDFC Bank, ICICI Bank, Kotak Bank, these are stocks which are relatively stronger. So stay with them, wait for markets to settle and then take a call.
Okay, that's the call coming in right now on how you should be approaching the markets today technically.
If you like this video, then like, share and subscribe to ET Now.